Hello everyone, so on this video we will cover many markets and I will try to get trade ideas. So the first market we start with is the crude oil, and what do I have in my system one? I'll just show you. So how to use it. Salty data stops at Tuesday. So if the system gives, I just forgot the S, gives you a different bias, then it's called a divergence. And this is when you execute the timing strategy. So if there is no divergence, then I won't. And in this week, there is no divergence because the week or the US dollar was weak than the last week. And as you can see over here in the COT data, for the commercials, it's weak, and also for the asset managers, it's slightly weak. So there is no real divergence, and even if in the others, so we can see that the asset managers were buying the pound, they were buying the commercial or the non-commercials, which are the large speculators, they were buying. Wait, okay, they were neutral. And for the crude oil, they were also neutral, but the asset managers were buying so heavy. So you can see that there is a plus 30% change. So, which is a very good amount from the last 2 weeks. And if we come over here, and I will use the seasonality from 10 years, we can clearly see that okay, this arrow here is for seasonality. So you can see that the seasonality will go till the last of Tuesday or the end of Tuesday. And if we come back over here, there is a breakout from this very strong, it starts from here, this very strong level, which was a resistance, and the other retails will just wait for a retest at this level, and then they will long like this. I don't know, maybe like here or even here, but this is not the case. We're not normal retails. We're using tools that most of retails do not use. So if I come back to the daily, or let me go to 30-minute chart so I can clearly show you. So how do I got this level here and this level? So it's very basic. It's using volume profile, but this is or with the experience with volume profile, I just can look at the chart and tell you uh, the expectation of the levels even without the volume profile. So we can clearly see that at this level here there was two strong moves which are over here. Let me show you. So you can see this strong move and this strong move, which there were resistance over here. So this is resistance 1, and this move ends, look at the bearish strength. So this is a very strong support too. So when price reach this level, then it will drop so heavy, so it might go to this level like this one. So it ends over here, just exactly where I'm trying to target as TP2. So for TP1, I will target the last strongest available move or bearish move, which is this one. This is not really strong, but also we have this level here. So what I will do is I will try to short from here, and I'll put my stop loss at this level. So why I'm shorting at this level, it's basically because the strong bearish move started at this level. So this is why I'm putting my stop slightly above, and I'm trying to enter here. So I'm not trying to get a sniper entry. I'm not using footprint here. So if I have footprint, I can have like 20 risk or ratio over here, because I know where to start, what level I will short, and where to put my stop, and even where to target. So I'll have a better entry. Like I can get it from here, maybe from here or from here, and I will adjust my stop. But who cares? We don't chase high risk reward ratio. Uh, just have it more than 3, and this is very okay. So I will just start or target this level, and you can clearly see if I use the Bollinger Bands, which study the statistics, where we're overvalued. So it was 2 standard deviation here, or plus 2 standard deviation, which means where 95% of data falls, so there is only the rest 5% of data to distribute, and then we can go down. So this is my entry. I'm using IC markets data. uh, Maybe your broker is not using the same prices. It's very okay. Just use the candles. Yeah, just this is let's just go with this. So 3.7 is a very good amount for TP1, and for TP2 I can go here. So this is what I'm targeting. Targeting the point of control, you can say, and I'm targeting the value area low, or this, where there is this strong zone before it. Anyway, so this is you can use the price action if you don't have the same prices. So you can put your TP at this candle, and your stop just above the close. I mean your entry just above the close, and then you put your stop like 1.3 or $1.5 above. Anyway, so I'm going to the second market, which is the pound for the US dollar, and you can clearly see in my system it's 6.6, which means go buy, but there's no divergence because price was going up on Monday and Tuesday. So this is okay. So this is why. Basically, we have those levels. We have the VWAP, and so we studied the crude oil. I'll give you the pound, and then we'll end up with the gold. And I think those three markets are enough, as I guess. So the first thing we can go for is the seasonality. So I'll just go in here and then switch to the daily chart, and you can clearly see that there is a downtrend in seasonality till Friday, and then there will be a correction before another wave or bearish wave. So as for seasonality, I will say it's going down, so I will have my arrow. Wait. So from Monday to Tuesday, there will be a little correction, so this is very good, so it can have a better entry. And it's down. So what's good about this is we didn't break this zone. So what does it mean? It means price can come back from to this level to retest, and then it will try to break it, so we can get enough liquidity from this level. And this is very good for us, so we can have a very strong move. So what I'm actually doing is I'm not using this. I'm using even the VWAP is on this level, so this is a very good level to go, and it's not very far, so price can go to it easily. So The last bullish move, which is here. Let me just delete this. So it ends here. Then we can take this level to short from. And then we can put our stop just above here. So what I will do, I'll go for a short at the beginning of the level. I will put my target here and I'll put my TP just where the movement ends, and then I'll adjust my entry so I can get my risk reward ratio plan. So this is all. I'll just try to make it a little bit readable. We can see. Okay, this is too much. I will try to make it with this week. So wait. Of course I can put my stop above this one, but just in case I don't get stopped and then price go to TP, I will risk some of my profits to get profits. So this is just, I can just let's say I enter here and then get my stop here. I get 4 risk reward ratio, but then it must I can get stopped, so I won't risk my profits or some extra profits. This is why I meant what I meant. So since this is a very strong bearish or seasonality, strong sentiment, and I can go for TP2, which is this level. You can see that this is a strong bearish move, so targeting this level is good. And since targeting this level means there would be a breakout, then price can just break here and then break here and then come to the next level, which is this strong bearish move over here. So I can target this level here as TP2. So we start with the I didn't fix this one. Okay. So we start as TP1 over here, and as TP2 I can go straight over here, and as TP3 I can go till here. So it's from 3 to 6.5 risk reward ratio. And for reasons, we have the same reason for crude oil. It's there is no divergence, and there is strong bearish seasonality, and that's it. So we have a very strong level here. So how you can determine strong levels or strong key levels? So when there is a very strong volume like this, on the edges there is low volumes, and on the edges of very huge clusters like this, there is the strongest key levels ever. And it's the same thing as the crude oil, as I'm showing you here. So if I go for the crude oil, we can see that on the edges of this huge cluster, you can see when there is low volume, I'm not talking about value area. This is the value area, which is 68% of data. I'm talking about the low nodes, low volume nodes on or beside on the edges of the huge volume clusters like this one. So you can see that price reacted to this level 4 times, and to this level 1, 2, 3, 4, another 4 times. And if you come back to the past, it's even reacting to it another times. 6 times. And even here you can see it was resistance, then break, resistance. You can see that price is still reacting to it. So that this is how to get your strong levels, or how to order your strong levels. So from one, starting from one to the unlimited. So those are the strongest levels among all the levels I'm drawing over here. So what I'm saying is those are the levels that can be rejected more than being passed through. So I will show you something. So I start to care about your eyes, so I will use a black tape or black board. So what we're gonna do now, I will show you the volume. Wait, I forgot. Okay, so why the low volume nodes on a huge volume node, which is here, they are important. Why? Because no one is interested over here. So the interest is here. Price is trying to find liquidity, because if I want to buy huge contracts, then basically I will try to find another one to sell me the contract. And where I can find it is when there is the point of control. So this is the main point. This is the main point of control. This is another volume, and it has its own point of control. And so if so, the price, or this is like a magnet, and those levels has very few volume and no one are interested in them. So price might reject, and or price might go through them and retest sometimes, and then go up. Sometimes it don't retest. So I'm sorry. Anyway, so this is the idea. But those are more likely. Price will reject so many times before breakout. But when there is a small volume nodes, then price prefer to just pass through them so fast, like those ones. You can see those ones. Price might prefer to pass through them than reject them. So this is what low volume node means. It means it can be strong breakout or strong rejection, but on the edges of very huge volume clusters there will be more rejection than strong breakouts. So you can see that 1 2 3, 1 2, another level here, and one okay, it's 4 points, 4 touch points. But when there is a low, very low volume, you can see that 1 2 touch, 1 1 1. So every level has just 1. So if we come back to here, this was a very strong level from the past. So if I use my volume profile, I can find that this is a huge cluster. So this is why this level was strong from the last time. So you can see that price reacted to it many times, 1 2 3 4 5 6, and on the above 1 2, and even in the future it started to react to. So this is the idea of how to classify your levels. So those are the strongest levels from the last week. And the idea, it's not just getting your levels, but you can classify the levels by its, or by their importance. So with the normal supply zone, or a normal supply and demand strategies, or support and resistance strategies, you can't classify the importance of each level. So if I use, let's say, a normal if I use an indicator that show me the levels, then I can't know which one is important. You can see they're uh, about the same levels, so it's getting the levels from the last time anyway. They're about the same levels, but I can't classify which one is more important. Now this is why using volume profile with price action is very crucial, even if it's not a real volume data. It's just a tick volume, which has another way to calculate estimated volume, but it still works. It's about 80 to 90, sometimes 100% or 99% accuracy. So even with 70%, I will take it because I'm not scalping over here. I'm taking huge moves. You can see that my stop is 30%, which is about if I go to the GBP or the pound data, then we can see that okay, so this is the this is how much the pound make per day. So if I go for average of those, then I'll turn it to a percentage, then I can see that the average of wait, this is I'm sorry, this is not the daily return. So the daily return is calculated like this. So where is the daily return? There is no daily return over here, so I'll just change. So it's close minus the open divided by the absolute value of the open. So if I just go like this and then type the same, so the average return is, wait, I think I made something wrong, or I made nothing wrong. So the average return is very low, but anyway, let's maybe I did something wrong. I won't care if I made anything wrong. So my stop loss, anyway, the idea of this is I don't not care if the data is not accurate 100%. So let's cover the last market, which is the gold. I have it over here. So anyway, for the gold, the same idea. So if I go to the daily and I use my use my seasonality, and you can clearly see that from Monday, okay, let me move this here. So from Monday to just going like this. Oop, oop. Tuesday. Friday. 5 days. 1, 2, 3. Okay. Let me come back. Did I made something wrong? No, I made nothing wrong. So we can see over here that we have two very strong levels. How to identify very strong level? We have this huge volume cluster, and on the edges we have level 1 and we have level 2, which is over here. So we had a breakout from our very strong level, and even when to use a VWAP on this very strong downtrend or bearish trend, you can clearly see that the closest level is here. So what I will do is I will just put my entry over here and my stop before the last rejection, which is over here. So there is a chance price will go over here. so before this rejection, but who cares? It's very far, and it's unlikely to go there, but even if it goes there, so who cares? Who cares? It will be just, even if the bias was right, then it will be just one stop loss, one 0.2% risk reward, or 0.2% risk. So what I will target is, we can see I will target as level 1, I will target in here, but then there is a very strong bearish trend. So what I will do is I will be a little bit greedy, and I will target this level in here, this where this bearish movement ends. So at this level, let's say. Anyway, who cares? This will be just my entry and my TP and my stop loss. Of course, I can put my entry a little bit early, like on this level or before it. Let me just mark it for you. I can put my TP in here, just to not take any risks. But this is a very strong bearish seasonality, so price closed here, so it's very unlikely to move only 0.5% in this strong bearish trend. So it can even get to here, so it can even get to this level. So this is why I'm very comfortable targeting. I just want to pull this, so I'm very comfortable to target this level, which is at 78. So then we covered 3 markets, and I hope you understood my way on the system, on the third system. So what I will do is I will just mark them with you. Of course you can skip, because we completed every important step. I will just change the color so I can know which week is which week. So we have the first position on, well, no, let's say the gold. First position on the gold with 0.2 risk on short. And it will be what the hell I did. How do I fix this? I have no idea how to fix this. Okay, can you? Okay. Okay, so my stop will be just here. I mean my TP, not my stop. So 3.8 after calculating the let's say the commissions and the spread. So this is why it's 3.9, but I put minus 0.1 to calculate the spread and the commissions. So let's move to the next one, which will be here on the pound. Let's put system 3 and 100%. So if I put anything in here, let's say 5, it will be calculated here. Imagine if I put system 1, it will be calculated here instead. This is why I really like this Excel. Anyway, I just forgot to put 7. No, not 7. Monday. Where's Monday? So here's Monday, it's 9. I think this video is very long. 30 minutes. Imagine watching me. 30 minutes. I would say let's just not say anything. So for the pound, I'm going in here, then in here, which is okay. So the same, and we're going short. System 3 and 100% following rules. We didn't use any emotions, I think. And the last market, which is the crude oil. Our entry will be just in here. I want to check if it's okay. It's overvalued, and this is good for us. So my entry will be like this. My stop, my profit, my stop loss. I will go for short 0.2 crude oil and the same date, and I think this is everything. So thank you so much for watching.